And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. The trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
And we're off. Good morning, everyone, and welcome once again to the market forecast for Friday, March 25th, 2022. I am JD. Thank you again for choosing to spend your time with us this morning. Overnight stocks in Asia closed mostly lower, with the Shanghai Composite down 1.17%. The Nikkei was up marginally 0.14%, and the Hang Seng was down more than 2%. In Europe, stocks are trading mostly higher right now. Here in the U.S., stocks are trading mostly higher also. Crude oil is lower a little bit, and the VIX is at 22.14, and the yield on the 10-year note is sitting at 2.365% at my last check. For our economic calendar today, we have the University of Michigan Consumer Sentiment Survey out at 9 o'clock Central Time. The Baker Hughes rig count out at 12 o'clock Central Time. We also have a few Fed speakers out: John Williams, Mary Daly, Thomas Barkin, and Christopher Waller, spread out throughout the course of the day. A couple of headlines from overnight. On the Russia-Ukraine front, Moscow signaled openness to holding talks with the Ukrainian government. Meanwhile, Ukraine urges the EU to close Russia-Belarus borders to enforce sanctions. Russian stocks fell 2.5% a day after the Moscow Stock Exchange partially reopened following a month-long closure. But weren't we saying yesterday they set it up so it couldn't go lower? There's no short selling, no speculative selling, right? According to Bloomberg, investors are starting to realize just how narrow the path is for Russia and some of its biggest corporations to avoid default after its invasion of Ukraine. On the world economic front, another one from Bloomberg: Kim Jong-un of North Korea is reviving nuclear brinkmanship aimed at pressuring the U.S. to accept North Korea as a nuclear power and remove crippling sanctions. The United States struck a deal to provide more natural gas to Europe and reduce the dependency on Russian oil, and an indicator from Bank of America is signaling a potential upside for global equities in the weeks ahead. That's encouraging. On the commodities front, Goldman Sachs chief economist John Hatzius said in a note this morning, "We estimate that it would take a sustained oil price increase to $200 per barrel to produce an income shock similar in magnitude to those that precipitated the 1974 and 1979 recessions, and this would significantly increase the 2022 recession odds." $200 oil, it's not something I even want to think about right now. Pardon me. Prices for raw materials that constitute the fertilizer market, such as ammonia, nitrogen, nitrates, phosphates, potash, and sulfates, are up 30% since the beginning of the year. Just a couple of headlines to start the day. How is everybody doing this morning? Who do we have in the room? Tachyon. Tachyon's been first in the room a couple days in a row now. Jay Crockett, Brian, Brody, morning Brody, Bill Phillips, James Harris, Alfred, Devant, Expediter, Marcelo, Michael, Terry, Sarah. Good morning, everyone. Thank you for being here. Well, what do you say we keep this short and sweet this morning? We'll burn through some charts, and then we will take it from there. Let me get this queued up. Alright, and we're off. Didn't spill any coffee again this morning. Good start to the day. Alright, let's take a look at the ES to kick things off. Here we go. So I said yesterday that the very first step, obviously, towards higher prices will be taking out those highs from Tuesday and Wednesday, which happened yesterday, albeit on a shade lower volume, and also losing about 8,300 in open interest. The 10-day moving average is now crossed above the 50-day. You can see that right here. Green is the 10, red is the 50. And we see the 20-day is still converging on the 50-day as well. Momentum still pointing higher, and volume looks to be pretty consistent. Also, this trade that I was monitoring, the measure move profit target on this double bottom trade here, finally hit overnight. Target was right around 45.17. Just in case anybody was keeping up on that, I'll get rid of those lines over the weekend. Let's take a look at the 4-hour. So it looks like we're running into some sellers right around this previous congestion area from early February. You see this over here? I guess it's mid-February. We saw some buyers did come in overnight around the 20-period moving average. I'm sorry, during yesterday's session, and again around this 10-period moving average last night. That'll prop this market up a little bit. Looking at this chart, I don't think it's out of the realm of possibility to take out the overnight high early on this morning. Moving on to the 30-minute. So there was a pretty wide trading range yesterday. I wanted to see some sellers step in around Wednesday's point of control. Right in between Wednesday's point of control and the top of this value area. I mentioned that in yesterday's forecast, and we did see some of that. You can see there was a lot of price action right here between 44.80 and 44.90 levels. It wasn't really that sustainable though, and prices quickly went up to test Tuesday's high and closed regular trading hours right here on the highs of the day. Overnight inventory looks to be mixed, maybe a little longer now. Prices are sort of jacking around these short-term moving averages all night. Overall, we appear to be in a little bit of a consolidation period right here over the last 3 trading sessions. But if things stay choppy like this, excuse me, momentum is still pointing higher, and volume is staying fairly consistent, so it's possible that we could see a little late Friday rip going into the close. Always love a good late Friday rip. I always miss them because I stop trading, or don't trade at all on Fridays, or I'll stop at noon. Let's take a look at crude oil. Here we are in a daily of the May contract. So after closing above weekly kickoff high on Wednesday, crude oil kind of took one on the chin yesterday and closed back below weekly kickoff high. During this move down, the May contract lost about 8,300 in open interest, and volume looked pretty healthy to me. We're looking a little weak again this morning too, so maybe Wednesday's short squeeze was just a head fake to shake out some weak shorts before a little pullback. Target on the downside will be this 10-day moving average right here. On the 4-hour, so we're trading back below these 10 and 20 period moving averages, and volume, like I said, has been pretty steady. After putting in this higher high yesterday, taking out Tuesday low will signal to me that we're in for some short-term weakness for sure. There's also this previous congestion area around 102 to 106 that goes back from early March to mid-March. I would expect to see some buyers step in and hold prices up if we start trading around these congestion areas again. Onto the 30-minute. I'm going to refresh this real quick. we go. So after closing on the lows yesterday, prices did rally just a bit overnight. We were met with some resistance right at yesterday's point of control area here. Then around 2:30 this morning, we had this move, which I can only relate to energy talks coming out of Europe, but I can't be certain on that either. Since then, a move higher came and tested the low end of yesterday's value area, where prices held pretty steady right there. Taking out this overnight pardon me, taking out this overnight high would give us this lower high, lower low, all on pretty strong volume. I think we're setting up for some weakness going into the weekend in crude oil right now. That's what it looks like to me. Let's switch over to the NASDAQ. Here we are in a daily. Again, this is looking pretty similar to the ES chart. We took out both Tuesday and Wednesday's high and gained about 3,200 in open interest on some pretty decent volume. Just like the ES, the 10-day moving average has crossed above the 50-day, and the 20-day is still converging on the 50 here. Momentum still pointing higher for the most part, and volume looks to be pretty consistent. Plus, we got another close above weekly kickoff high, and we look to have broken out of the small congestion area, at least for now. This 20-period moving average saw some buyers step in yesterday, and we're currently trading above this 10-period moving average. Right now we're trading around a previous congestion area from late January, early February, right here between 14.6 and 14.800. A breakout above here could see a test of this high from February 9th also. I was looking at this earlier today. This high from February 9th around 15,000 level. That could be a new target. It doesn't really seem out of the realm of possibility for today. Let's take a look at the 30-minute. So yesterday we took out Wednesday's low right on the open, possibly just to test these overnight longs. Then we saw buyers start to step in right at Wednesday's value area low here. Some selling pressure did come around Wednesday's regular trading hours high, giving us this nice sort of double distribution here. But it wasn't enough to hold prices down, obviously, and it went on to close right at the high of the day. Overnight inventory looks a little mixed, trading around both sides of these short-term moving averages. Things are looking strong right now, though. Like I said, 15,000 doesn't seem out of the realm of possibility for me today. Moving on to gold. So we had a nice little pop in volume yesterday. During yesterday's rally, but the April contract lost another 26,000 in open interest. So, like I was saying yesterday, the roll is definitely on in this market. We made a nice run up to test weekly kickoff high and the upper channel line of this bear flag before starting to back off. With the selling pressure that came in right at this weekly kickoff high, I'd be surprised to see this market close outside of the weekly kickoff zone later today. Looking at the 4-hour, so we're slowly working our way out of this recent congestion area. We're making higher highs, higher lows, but volume just doesn't impress me all that much, and now we know it's due to the roll. Here's a little more dialed in look at this bear flag channel also. We weren't quite able to make it up to this upper channel line yesterday, but it looks close enough to me. Right now we'll need to see some buyers stepping around this 20-period moving average, I think, if this is going to hold up. Otherwise, could be look out below. But it's firmed up quite a bit just in the last hour or so. Let's see what the 30-minute has. Yeah. So, the last 2 hours, firmed up quite a bit. We had a nice move higher after this early rip and dip here yesterday morning, and went on to close right off the highs of the day. Overnight inventory is a little short. We see some sellers stepped in right around yesterday's point of control overnight. And we're still trading inside yesterday's value area. So if there is going to be a leg down, I think the next move should be to take out yesterday's overnight low down here at 1937. But the volume on this move up looks alright. Let's see what happens in the next hour. If we don't see some more sellers step in right around weekly kickoff high, I expect they'll be coming in right around this porting control here. And like I said, I don't really expect this market to close outside of weekly kickoff zone. But we will see what happens. That is my opinion. On to the 10-year. So here's a daily of the 10-year. The yield on the 10-year ticked down to 2.365%, and we're entering our 4th day of consolidation here. The June contract gained about 22,000 in open interest during yesterday's move lower, and volume still looks fairly healthy to me. We're trading below this 10-day simple moving average, and momentum is pointing lower still. On the 4-hour here, these ranges are just getting tighter and tighter and tighter. We're still dancing around this 10-period moving average, but this thing just looks like it went flat. You know, volume really dried up in the overnight session, and it's just going nowhere right now. On the 30-minute, still trading inside of yesterday's value area. Tested both ends of yesterday's value area high. Pardon me. Tested both ends of yesterday's value area. First the low end, then the high end here. A 7-tick range overnight. That's just not the kind of market I'm looking to be trading. But I don't see this market really moving anywhere today. There's a bit of Fed speak going on later, so headline risk could be a factor for notes. And if this is going to break out, I think if it doesn't break out, obviously we're just going to be looking at more choppiness today. But this really just looks like it went flat. And with that, we'll check back in with everybody. How's everyone doing this morning? Crude on flat now, 1 eclipse highs, 130.50, 13.5 days from 223 start. Was also 3 years, 5 months, 3 days. Khashoggi. Oh, yeah. Crude oil is taking out the low of the opening range. I know you guys will be looking forward to Hogue coming back and doing the opening range trade with you in crude oil. Speaking of which, I will be joining you again here on Monday. Then Tuesday will be Mr. Hoagland's triumphant return. So there will be no group coaching on Monday, but we do expect it to resume on Wednesday, as well as Thursday's Make Hogue Money session, barring any sort of disaster. So with that, I guess I'll leave you guys to it. Have a great morning. I'll give you a half hour to prepare for the equities open. If you have any questions for me, feel free to drop me a line. I'm johnd@topstep.com. That's my email. Happy to answer any questions you might have. Other than that, there will be no recap today. We don't do recaps on Friday. That's been going on for a while. I'm sure you're aware. So, with that, I will leave you to it. Have a wonderful trading day. Have a great weekend. Stay safe and take your deep breath. Yes, thank you, Takian. Appreciate the reminder. Take your deep breath and have a wonderful day, everybody. I will see you Monday.